The price of DogWifHat is on a massive rally again. We are continuing to climb, but I found some data on chain that contradicts the current price movements. I don't know why that is, and I wonder if you've got an explanation for this. But let me show you what I mean. So we are currently at $2.25. Today, the price went up by 27%, and since listing on CoinMarketCap before Christmas of last year, we more than 10x'd. But once we look at the number of holders on chain, there's something very interesting. On the left side, we've got the number of wallets on Solana that have at least 500 WIF tokens. So at the current price, that's a bit over $1,000. For the medium chart, we go a 10x from that. So that's a minimum holding of 5,000 tokens. That's at least $10,000 worth of the token. We go another 10x for the right chart. That's now 50,000 tokens or more than $100,000 worth of the token. So we see that retail continues to adopt, retail continues to buy, and the whales continue to rather sell. That's an effect we tend to see quite commonly across crypto, across different assets, but have a look at the magnitudes. This is where I have a problem. On the right side, those kinds of whales have a minimum holding that's 100 times larger than the ones on the left. The wallets in the middle don't really have that much of an impact, right? They pretty much went sideways. Maybe they also sold slightly, right? The number of wallets went down maybe by 10%, but let's ignore this. This doesn't have too much of an impact. I want to look at the impact of retail versus the whales. The number of whale wallets fell by roughly 500. The number of retail wallets grew by roughly 7,000. Now, when those wallets on the right are 100 times more important, then those 500 wallets have a selling pressure that equals roughly 50,000 retail wallets. But again, the number of retail wallets grew by 7 to 8,000. So based on that data, the price should have actually dumped. It should not have done more than a 10x. What's also noteworthy is how the number of retail investors did not grow since the middle of April. We did see how the number of medium-sized retail did go down though. We also have seen how the number of whales went down. So again, since the middle of April, we should definitely see a declining price. Now let's have a look at the middle of April. The price did decline, but not by much, right? From $2.50 to $2.25. Again, while the number of whale wallets fell by roughly 150, which is equal to 15,000 retail wallets. And that's a problem I've got with the data here. I do not know where all the buying pressure is coming from. It appears that the retail investors cannot offset what the whales are selling, at least when we look at the number of whales. And so the only explanation that I have, you might have another one, right? But the explanation that I personally have is that there's probably 1 or 2 or 3 mega whales that continue to accumulate. Because what we can see in the centralized exchange metrics, what we see there is that Binance has most trading volume and that there's even $1 billion almost worth of trading volume on the perpetual futures market. So on the bets, on the price, on the derivatives. So there's centralized exchange leverage in the market. And that might be partially driving the recent price rally, those 27% today. Because again, it's not the number of retail investors that's suddenly growing that dramatically. If you've got an idea what's going on, then feel free to comment this down below. If you want to get some updates on DogWifHat, I'm going to make updates, then feel free to subscribe. I publish videos regularly. One more thing, in case you've got Telegram, feel free to join us. The link is down below. It's 100% free.